All right, guys, PayPal just reported they were expected to make $1.20 per share, and they were expected to do $7.4 billion in revenue. They reported $1.24, which beat on earnings, but they missed on revenue slightly by to 7.38 billion. They just missed by $20 million, a cool 20 million. Now, I'm a fan of PayPal, not necessarily at this price. I have puts to buy it at much lower prices. So, of course, my personal bias was I was hoping it would miss on everything and the stock would go to $4. But unfortunately, that didn't happen. Let's check it out and see in our software where the stock is currently after hours. It is currently up 7.5%. What is going on with this world?
Full year 2022 net revenues reached $27.5 billion, growing 8% and 12% excluding eBay.
Mother of pearl.
Cash flow to $5.8 billion, free cash flow, operating cash flow $5.8 billion, free cash flow $5.1 billion.
So this is the actual press release from the company.
Yep.
It's currently up now 6.25%. So guys, if you're new to the channel, I like when stocks go down. I want to buy PayPal at a much lower price. So I'm not happy when it goes up. And on top of that, we don't really care about quarter to quarter earnings. Look at Google, for example. It is down how much in the last few days because of this Chat GPT. Some programmer got something wrong and the stock is down hundreds of billions of dollars.
Yeah, it's like probably at this point 160 billion.
Is it really that much?
Yesterday was 100 billion. Today it was down another 5% last I saw.
So our goal as value investors is to find mispricings in the market. And usually in the short run, there are mispricings. People will beat up a stock because they miss on something or send the stock sky high for whatever reason. What is the reason why the stock is going up so much? I don't even know. Because EPS beat, but that can't be enough.
Let's see so their forward guidance, quarter one, 2023, net revenue is expected to grow 7.5%. Maybe it's that. Maybe it's everybody's euphoric because they're a tech company and they're not pulling back.
Look at that gap earnings per share.
Yeah.
62 to 64 cents compared to 43 cents in the prior year.
Did they do layoffs? Maybe people are happy about that.
More information will come out here.
We're going to hear more on the earnings call this afternoon or this evening.
So let's check out some of PayPal's financials. Let's look at the 8 pillars here. And guys, I want you to remember that we are value investors, and we're not the value investors who say they're value investors. We actually do it. We actually root for stocks to go lower. If that sounds confusing to you, you need to subscribe to the channel. You need to understand this because you'll become a better investor with the mindset of long-term investing as well as lower stock prices is my friend. What's up, Mo?
I want to point this out. So this is Disney. Disney last night reported earnings. People were very excited. This thing was at $118 a share earlier today, and I couldn't believe that it closed at $110, down 1.25%. So this could be the same thing that we're seeing for PayPal.
Of course.
It's an initial reaction, but don't get fooled by earnings thinking that it's over. It's just stocks are going to go to the moon. It doesn't work that way.
Don't look at my screen.
Okay.
How many check marks does it have out of 8?
I would guess based on last time 6 or 7.
Yeah, it's 7.
Okay.
So here's the interesting part. Their 5-year PE is 31. Their 5-year price of free cash flow is 21. This means they're reporting more free cash flow than earnings. It's better that way than the other way around, right?
Yeah.
So the question is this too much for the company? We don't know. Remember, if a company could be cheap, but if it has no growth potential and can't justify that, it's garbage. A company could be expensive with a lot of growth potential. Our goal is to look at a company and look at the future that we project out. We make assumptions about the future and decide what to pay today based on those assumptions. Some high-level things. Market cap of $92 billion, enterprise value of $141. That's a big difference.
That is a big difference.
That's $50 billion in essentially debt, right? Not essentially. It's a net debt and everything like that. 1-year PE of 40, 5-year PE of 31, profit margin, 5-year profit margin of 14.5, gross margin 51, reasonable return on invested capital. We want over 9%. It's 10%, not the greatest.
I expected higher from PayPal on ROIC.
Oh yeah, so did I. Yeah, I was surprised by this low ROIC. I thought it'd be higher. So what's return on invested capital? This is what Warren Buffett and Charlie Munger want to see to justify a moat. The higher the return on invested capital, the less money that needs to be invested in the business to grow profit. And they can grow profit at a much faster rate, and they can use the cash they saved to buy back shares, pay a dividend, things like that. Great companies have a high ROIC and can compound on itself, right? Like a company like Apple, the reason Warren Buffett loves it, its ROIC over 5 years, like 37%. That's a really large ROIC. And as Munger says, even if you pay a little bit more than you should, if you buy whatever the ROIC for a business is about what you're going to make on the company and the investment. Okay. The question is, how much is enough overpayment? You should pay more for a high ROIC. Right. Now let's go check out the analyst estimates. Growth, baby. Analysts expect $5 per share in profit this year and growing to $7.50 in the next 3 years, and revenue of 30.6, not growing much, to 36 billion in the next 2 or 3 years. That's growth of mid-single digits. So there's growth. PayPal CEO Dan Schulman to retire at year end.
So the stock should be tanking right now.
And it's
oh my God, it is. It was just 5.5%. Now it's 4.5%.
So 1.06%.
Now 4.27%.
Yeah. It was at $84, whatever it was when we first went live.
Wow.
Went to the video.
Wow.
So, guys, PayPal, the reason I like PayPal is safety. People will go to PayPal for safety. If I want to pay for something and know, like whenever I buy something from China, like I know it's coming from China, I love using PayPal because I know that they're going to protect me if the deal goes bad.
China.
So, what do you pay for PayPal? Well, this is our stock analyzer tool. Again, if you're new to the channel, this thing was used 1.3 million times in 2022 by our users. And if you like the software so far, and you've seen a lot of our videos, we have a special running. 7 days, $7. Try it out for $1 per day. That has been absolutely popular. It's really been a very popular choice for people in the last two weeks. Try it out. If you don't like it, you cancel. But this for $1 a day will change the way in which you look at investing. It'll reduce your fear of investing. It'll put you in a community of people who like investing and who are like-minded and have the same kind of value mindset. Because the thing we've found is the hardest part about investing is the emotional side. And if you have a lot of people who think like you and act like you and talk like you, you're more likely to do the right thing. Oh my gosh.
2.68. So the CEO is stepping down year end. Now it's worth 2.5% less than it was a couple of minutes ago.
Stocks are irrational in the short run. Guys, the efficient market theory doesn't work.
Correct.
So back to our stock analyzer tool. What this does is, excluding the balance sheet, it allows us to make assumptions about the future, and it'll tell us, based on those assumptions, what price we should pay for the stock today based on our own assumptions, right?
Yeah.
I look at PayPal and think this company will be around for a very long time. I'm going to do a 20-year analysis. Mo will do a 10-year analysis. This is super popular on our site because it allows people to get an understanding for what a business is worth, because every investment is the present value of all future cash flow. I look at PayPal. What do you
go negative?
Oh my God, it's 1.5%.
1.5% now.
What if it does go negative? I mean, these are the things that we talk about all the time, Mo.
Yeah.
Things are irrational.
Totally irrational.
And you have to sit there and decide, are you going to look at Mr. Market, who's irrational, and say, I'm going to buy your stock, or I'm not going to buy your stock, or I'm going to sell you my stock? That's the question you need to ask. That is the absolute question. Mr. Market is not rational, and it doesn't care what you paid for a stock. All it's going to tell you is, hey, today I think the stock is worth this. You want to buy it? And you can say yes or no. In fact, you can sell them stock. Hey, today I'm going to pay you $220 for Tesla. Great. Here's the stock. Mm-hmm. Take it. I'll take it.
Yep.
The hardest part about investing is when stocks are going down and margins are going down and the economy is not doing well. Do you have the ability to say, this will not last forever? Mm-hmm. That's the hard part. That's why it's important to pick quality companies that can stay around for a long period of time. One of the first things I would do when researching PayPal is understand that long-term liability. Understand that debt difference between market cap and enterprise value. Market cap is buying all the shares at the current price. Enterprise value is buying the entire company, also the shares, and paying off all the debt, essentially.
Yeah.
So, Mo.
All right.
You do your analysis.
Okay.
I'll do mine. We're going to do low, middle, and high for revenue growth first. Okay. Then we're going to do low, middle, and high for profit margin. Okay. Then we're going to do free cash flow margin.
Oof.
Okay. Then PE, low, middle, and high. I'm going to do something a little bit different here. So this is the art of investing. We don't know if our numbers are right or wrong. We have no idea, but we're trying to get a gauge for, are we even in the ballpark? The stock is currently at $79.90. If we hit the analyze button, and there are going to be 6 numbers that pop up. If they're all red and the highest number is 40, why do any more work? Just sit there and say, listen, it's nowhere close. But if it's a mix of red and green or it's close, then you start saying, okay, I need to be ready. I can sell puts, which you can learn in our community if you sign up. I can sell puts to be paid to wait for a stock to hit the price I want it to hit. Imagine that. Imagine you sat there and you wanted to buy the house next door. And you could sit there and literally get paid to wait for the price to fall. Mm-hmm. That's what selling a put is doing with a stock.
Yeah.
Mo, what were your revenue growth assumptions?
5, 8, and 11 for 10 years.
Love it. I did 4, 7, and 10 for 20 years.
Okay.
Profit margin.
13, 15, and 17.
Okay, I went a little bit more conservative. I did 12, 13 and a half, and 15.
Okay.
I do think I should have been in the 14 in the middle range. Actually, you know what? I'm gonna do that.
Okay.
Because I'm gonna sit there and say, let's say they crush it there. All right, middle, free cash flow.
19, 21, and 23.
Okay, I did 18, 20, and 22.
Okay.
Which I think is still conservative. You know what? You're right. Nope, yours is right.
Yeah.
19, 20. No, because I thought about, okay. PE.
So PE, I did 14, 16, and 18. I think 14 is low, but if I went 15, 17, 19, I thought 19 was high.
It's funny you mentioned that. I did 14, 15 and a half, 17. Because it has a reasonable return on invested capital.
Yeah.
Something I'm willing to pay a little bit of a premium for in the middle.
Right.
Desired return.
10, 11, and 12.
I did 10, 12, and 14.
Almost went with that.
This is a big number, but I think these are big numbers.
Yeah.
These are all high numbers.
I almost put in 10, 12, and 14.
So I have it on my watch list at 60. I don't know if that's the right number, and it's not necessarily to buy it, so don't mimic that. But I hit the analyze button. What are your numbers, Mo?
All right. 50 to 74, 103 to 140, middle ground 73 to 102.
Low side for me, 45 to 68. High side, 78 to 115. Middle of 60 to 90. So this tells me my 60 is probably about right, but I want to sell puts on it. So I might sit there and call it 65. I might edit that. So guys, again, if you like this software and if you want to look at all these tools, $7 for 7 days, everythingmoney.com. Check it out. Subscribe to our channel. This will change the way in which you view money. I can guarantee that. Thank you for your time.